Thank you, Ini. Well, let's begin with how U.S. markets performed yesterday after President Donald Trump announced he had productive talks with Iran. Yes, Maria Bird.
The U.S. stock market hit an upward swing toward the second half of the day on Monday, as the Dow Jones was up at 1.4%, the S&P 500 was also up at 1.2%, and the heavy tech Nasdaq was up at 1.4% as well, as many investors were watching the president's announcements that there would not be a power plant strike this week in Iran, as this also showed much hope that there could be discussions continuing throughout the week between Tehran and the U.S. This does show some hope that the president's announcement that we could see an end to the war in the near future might be likely, as investors still watching, as only time will tell how soon the U.S. economy will see an upward swing for a long time to come.
Now let's get a check in on other markets now. We see gold prices are falling deeper into bear market territory, now down more than 20% from recent highs as the sell-off intensifies. The decline is being driven by a stronger U.S. dollar, rising bond yields, and fading expectations of interest rate cuts, all of which are reducing the appeal of the non-yielding assets. Analysts say the drop also reflects investor repositioning, with funds moving away from safe haven assets into higher return investments despite ongoing global tensions. Next, we see Abu Dhabi National Oil Company, ADNOC, has condemned the weaponization of the Strait of Hormuz, calling it economic terrorism with serious global impacts. The statement comes amid the ongoing U.S.-Israel conflict with Iran, which continues to disrupt this key energy shipping route. The Strait of Hormuz handles around 20% of global oil and gas shipments, and attacks linked to the conflict have pushed crude prices higher and fueled market volatility. Now, while some tankers, including those bound for India, have passed safely, overall tanker traffic remains constrained due to heightened security risk. Now, we see that the European Union and Australia have finalized the long-awaited free trade agreement 8 years in the making, aimed at expanding economic ties and diversifying markets beyond traditional partners. The deal eliminates tariffs on nearly all EU exports to Australia and most Australian critical mineral exports to the bloc. Now, officials say the pact could boost EU exports by up to €1 billion annually and grow trade by as much as 3% over the next decade. It also includes strategic cooperation on security and defense. Now, the breakthrough comes amid global trade tensions, including uncertainty over U.S. tariff policies, prompting the EU to pursue deeper ties with partners in the Indo-Pacific region and reduce reliance on China. Still in Asia, India's private sector growth slowed in March, with business activity easing to a 3-year low amid rising oil prices and global uncertainty. HSBC data shows the composite PMI fell to 56.5 from 58.9 as both manufacturing and services lost momentum. The slowdown is linked to higher energy costs driven by ongoing tensions in the Middle East. The Indian rupee has also weakened, reflecting pressure from rising import bills and capital outflows as investors react to global market volatility. Now, see, despite this, analysts say demand remains relatively resilient, though inflation risks are beginning to build. Now, we see Japan's inflation eased in February, with core consumer prices rising 1.6%, slipping below the central bank's 2% target for the first time in nearly 4 years. A slowdown was largely driven by government energy subsidies, which helped offset rising global oil costs. However, underlying inflation remains firm. Analysts say the mixed signals could complicate the Bank of Japan's policy path as it weighs slowing headline inflation against persistent price pressures. Now, AI developer OpenAI has warned that its close reliance on Microsoft could pose a significant risk to its business if the tech giant changes or ends its support. OpenAI says Microsoft accounts for a large share of its financing and computing infrastructure. Now, the disclosure appeared in a document for investors ahead of a potential IPO later this year, with OpenAI possibly valued near $1 trillion. The company says diversifying partners is key to stabilizing its business. OpenAI also cites legal challenges and supply vulnerabilities like chip shortages as risk. Despite this, Microsoft is expected to remain a long-term partner. And those are the global updates from the global space. I'm Willie Bong.
Thank you so much, Will. And just before we go on the program, we see that the equities market is on a recovery path this morning, 0.21% up at this time, even though it's still around 199,000 level. The most active stocks for now, Wema Bank, Access Holdings, and Japol Gold, Mutual Benefits, Consolidated Hallmark, see it on the gainer side, John Holt, and Airtel Africa. Been a while, yeah. Premier Paints also, those are the gainers. The losers, Geregu, Nestle, Total, University Press, they're still experiencing profit taking at this time. At 1:30, Willie Bong will be here to give you updates on the market and a whole lot more that will be during Business Incorporated. For me, bye-bye. Have a good day.